Assalamualaikum and hi everyone. My name is Asma Nurhaulah binti Ismail, number matric 080202. In this video, I will present about BWIS Group Berhad. BWIS Group Berhad started in 1999 as a steel trading company. Today, it is a Malaysia-based manufacturer of sheet metal products and a supplier of scaffolding. Its main products include roofing sheets and trusses, industrial racking systems, welded pipes, and scaffolding solution. These are used widely in construction, warehousing, and industrial projects. BWS was listed on the ACE market of Bursa Malaysia in 2024. The company operates in the steel and construction sector, which depend on construction activity, steel prices, and the overall economy. Despite these challenges, BWS has shown growth supported by expanding operation and rising demand. This report evaluates BWS for a proposed loan of 500,000 ringgit. The analysis uses its financial statements, the principle of good lending, and the 5Cs credit to assess its repayment capacity and help us make a sound lending decision.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Afini binti Zulkifli. My matric number is 080201. I will be presenting about company's creditworthiness and ability to repay the loan. So based on our financial ratio analysis, BWIS demonstrates a strong creditworthiness and a good ability to repay the loans. The company's financial performance improved in 2025, indicating a stronger financial position and lower credit risk. Firstly, in terms of liquidity, the current ratio increased from 1.95 to 2.16, while the quick ratio improved from 1.18 to 1.27. So this shows that BWIS has sufficient current assets and is able to meet its short-term obligations comfortably. Secondly, the company's debt management remains healthy. Although the debt to equity ratio increased slightly, it remained below 1.0 and 0.98, indicating the company's debt level is still manageable and does not pose significant financial risk. In addition, the interest coverage ratio increased significantly from 23.24 times to 31.74 times. This means the company generates enough operating profit to easily cover its interest expenses, which strengthens the loan repayment capability. Lastly, BWIS recorded stronger profitability in 2025. The net profit margin increased from 3.25% to 5.44%, while return on asset improved from 1.91% to 3.50%. These improvements indicate better operational efficiency and a stronger ability to generate profits. Overall, BWIS is financially stable, has strong repayment capacity, and is considered a low-risk borrower for lenders. That's all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. I'm Nur Auni Zulaika binti Azhar and my matric number is 080462, and now I will continue with the 5 C's of credit analysis for BWIS, which are character, capacity, capital, collateral, and conditions. So first is character, which refers to the management quality and credibility of the company. For BWIS, the management demonstrates strong business and financial management capabilities. This can be seen through the company's improving profitability over time. In addition, the increasing net profit margin and return on asset reflect good decision making, while the high interest coverage ratio indicates that the company managed its debt effectively. Therefore, BWYS has a strong and reliable management team. Next is capacity, which refers to the company's ability to repay its loan obligations. BWYS has a strong repayment ability, supported by consistently increasing revenue and profit. For example, the interest coverage ratio improved from 23.24 times to 31 to 74 times, indicating a very strong debt servicing capability. The company's liquidity position has also improved through higher current and quick ratios. Therefore, BWYS demonstrates a strong repayment capacity. Moving on to capital, which refers to the company's financial strength. BWYS maintains a stable share capital of RM200.54 million for both financial year 2024 and financial year 2025. In addition, its working capital has increased, indicating a stronger financial position. This enables the company to support expansion activities such as factory development and new joint ventures. Overall, BWYS has a strong capital position. Next is collateral, which refers to the security provided to the lender. Although BWYS has a strong credit profile, collateral remains important as a backup source of repayment. It helps reduce the bank's risk and may include assets such as property, machinery, and equipment. Therefore, collateral provides an additional layer of security for the lender. Lastly is conditions, which refer to the external factors that may affect the business. BWYS operates in a relatively favorable environment, particularly due to the growth of the construction and manufacturing sectors in Malaysia. In addition, the company has demonstrated resilience against inflation and rising operating costs. Overall, the external conditions are supportive of BWS future growth. In conclusion, BWYS demonstrates strong creditworthiness and a solid ability to repay loans. The company has shown improvements in liquidity, profitability, debt management, and operational efficiency, indicating that it is financially stable and capable of meeting both its short-term and long-term obligations.
Next, I will explain the financing core assessment, which include the purpose of the loan and the sources of repayment. Firstly, the purpose of the 500,000 ringgit financing facility is to support BWS working capital and capital expenditure requirements. This financing will be used for the company's 2026 expansion plans, such as increasing production capacity and purchasing new machinery. This helps BWS to expand its business and generate higher revenue in the future. Next, for the sources of repayment, the primary source comes from BWS operating cash flows. Based on the company's strong financial performance in 2025, BWS recorded a net profit of more than 15 million ringgit and achieved an interest coverage ratio of 31.74 times. This shows that the company has sufficient cash flow to repay the loan comfortably. For the secondary source of repayment, the bank is protected by the company's collateral, including plant, machinery, and buildings under a registered debenture, as well as personal guarantees from the directors and shareholders. These serve as additional protection in case the company faces financial difficulties. For section summary, BWS demonstrates good creditworthiness and has a strong ability to repay the proposed loan. The company shows improvement in liquidity, profitability, debt management, and operational efficiency, which indicate that BWS is financially stable and capable of fulfilling both short-term and long-term obligations. Based on the 5 Cs of credit analysis, BWS also received a positive assessment in terms of management quality, repayment capacity, and business condition. Although the debt to equity ratio has increased slightly, the debt level is still manageable and does not pose a significant financial risk. Therefore, BWS can be considered a suitable and lower risk borrower, making the company eligible for loan approval.
So let's move to the recommendation. Based on our financial analysis and credit assessment, BWYS Group Berhad is recommended for approval of the 500,000 ringgit term loan facility. The company has shown strong repayment ability and improving financial performance in 2025, which supports its creditworthiness. The facility should be structured with a tenure of 60 months and repaid through monthly EMI installments. The pricing can be set at BLR plus 2% to 3% depending on market conditions and the company's future performance. To reduce credit risk, the bank should obtain adequate security, including plant and machinery, buildings, inventory, trade receivables, and SSM debenture, and personal guarantees from the directors. In addition, the company should be required to comply with financial covenants. This includes maintaining a current ratio of at least 1.5 times and interest coverage ratio of at least 6.0 times and a debt to equity ratio not exceeding 1.5 times. For monitoring purposes, BWYS should submit monthly management accounts within 14 days after month end, as well as quarterly and annual audited financial statements. The loan proceeds should be used only for working capital or machinery purchases related to the company's operation. Finally, the agreement should clearly state the default conditions such as missed payments, covenant breaches, or unauthorized charges over the collateral. Overall, this facility is considered acceptable and well supported by the company's financial position. Now, let's move to the suggestion for improvement for BWS Group Berhad. Firstly, the company should improve its liquidity management by continuously monitoring cash flow to ensure that sufficient funds are available to meet short-term obligations, especially during periods of slower sales or increasing operating costs. Secondly, BWYS should control debt growth carefully by avoiding excessive borrowing and maintaining a prudent capital structure to prevent future repayment pressure. The company should also enhance cost efficiency by controlling production costs, logistics expenses, and administrative overheads. This will help maintain profit margins and improve overall profitability. In addition, BWYS should improve inventory management through better stock planning and monitoring. This can reduce excess inventory, lower storage costs, and improve the efficiency of working capital. Lastly, the company should maintain strong financial monitoring practices through regular financial reviews, budgeting, and cash flow forecasting. This enables BWYS to identify potential risks earlier, make better decisions, and maintain financial stability. Overall, these improvements will help BWYS strengthen its financial position, reduce risk, and support long-term business growth.
In conclusion, our financial analysis and credit evaluation show that BWS Group Berhad is financially stable and has strong creditworthiness to support the proposed 500,000 ringgit loan application. Based on the company's 2024 and 2025 financial statements, BWS recorded positive improvement in liquidity, profitability, debt management, and operational efficiency. The increase in current and quick ratio shows sufficient liquid asset and stronger cash management. Profitability improved with higher net profit margin and return on assets, reflecting better operational efficiency. Additionally, faster inventory turnover indicates more efficient inventory management and improved cash flow. Under the 5 Cs of credit analysis, BWS demonstrates strength across all 5 areas: character with capable management, capacity with strong repayment ability, capital with a stable structure, adequate collateral, and favorable condition in the construction and manufacturing industry. While external challenges like inflation exist, BWS has shown resilience and adaptability. Overall, BWS Group Berhad is a suitable lower risk borrower. Their strong financial performance, stable cash flow, and improving operational efficiency provide confidence in loan repayment. Therefore, with proper monitoring, financial covenants, and collateral requirement,
the bank may proceed with approving this loan application to support the company's future growth and long-term sustainability.